Here side by side we have two charts. One is a daily chart and this is a 5 minute. Okay, so this is 5 minute. Okay, so on the both charts we can see there is a similar pattern formation, that is descending triangle pattern. See, however, we can see that on the right hand side price moved down. The descending triangle is to be uh, for information. Descending triangle pattern is a bearish structure, bearish pattern. However, on the right hand side we can see that price really came down, but on the contrary, on the left chart price went up. Why it went up? These both are similar patterns. It is quite similar, right? However, on the right hand it was successful and on the left hand it was not. Why did it happen? And what was the reasons for its failure? One failed and the other one succeeded. Let's discuss out this in the video later. So please stick to the video and watch down. Hey everyone, welcome to Trader Neo. Here is your friend Neo with another powerful trading concept that can level up your market game. Today, we are diving deep into the descending triangle pattern, a popular and reliable chart pattern that traders use to spot potential breakdowns and big moves. But what exactly is a descending triangle? Why does it matter? And how we can use it to our advantage without failing or fake outs. To know all this, stick around, cause at the end of this video, we will know how to identify this pattern, understand its psychology, and use it like a pro in our trades. So let's move on to the screen. On the screen, we can see a this is a 5 minute chart of an instrument. This belongs to NSE, Indian market. So let's first see what is descending triangle. A descending triangle occurs when price goes up. There it faces a resistance. It comes down. It comes slightly down where it finds a support. This horizontal line is support. Let's mark it as support. From here price rebounds back. However, it does not reach the previous uh, level and finds resistance below it and comes way back down. It comes back up to this support. Here it again finds demand. It goes up. However, as in the previous case, it does not reach this level, the previous high, and comes down. This way it moves around significantly, like 2 to 3 times depending on how the market situation is, and we can see that the price has formed a somewhat triangular pattern, a triangular pattern on which base is horizontal, and it's one of the we can say 90-degree triangle in which base is horizontal and the hypotenuse, this one, is slanting downwards. So this is called a descending triangle. Descending means coming down. So when does it break? When the horizon when price breaks down this horizontal support, this point is termed as breakdown of descending triangle, and upon its confirmation we can we can uh, anticipate our move downwards. Usually the down move is usually we plan for a down move that is equal to the uh, this line. The length of this line is equal to the length of the move that price usually makes after breaking down this triangular pattern. So this we have seen this triangular pattern. Now let's try to find out on this chart. Here we can see that this is 5-minute chart. Price moved up, it went up, then it came down again, found a support. This horizontal line is support. It went up finding demand, it came back down again, and this way it was broken down. And when it broke, this is the top of descending triangle, this one. So this length we can assume up till here. Here the first support after breaking down, we can see price consolidated in this range. So this was the first, this was the target, and this length, vertical length, is equal to the one that we marked on the descending triangle. So that was this descending triangle. However, one thing to notice is that this descending triangle, let me first take a picture of it. Where is the picture snipping pad? Here. Okay, first let me clear all the drawings. Okay, the drawing is clear. Let me make it a bit up. Now let's draw again clearly. So this is the support line and this is this descending triangle. Now let's take a picture of it, because there is something I want to show you guys when this pattern fails and when this pattern does not fail. Okay, so we have this picture. Let me keep it side. Okay, let's now remove the drawing. Okay, drawing is removed. Now we will look for another equity that also I had seen a descending pattern. However, that descending pattern did not follow, it failed. That was daily chart. Okay, where was it? Yeah, this one. Let me, okay, this is okay. Let me mark down the descending triangle for you. Here, see, this is the horizontal support line. This we can call it as our right angle one leg, and see, can't we isn't this also a descending triangle? Now let me bring out the picture of what we had. uh, Let me bring out the picture of what we had saved. Okay, so how to show? Okay, let me minimize it a bit. Okay, yep. Is that visible? Yeah, that is visible. See, here this is also a descending pattern, this is also a descending pattern, both are similar. Can you guys notice it? Yes. So but here we can see that price came down, it broke down the pattern. But in this case, did it break down? No. On the contrary, it went up. So why did it happen? Let me break down it for you. So descending pattern is a bearish structure, and usually bearish structure are valid when they occur at top. But this pattern, did it occur at a top? No, it has this pattern formed at the bottom. Price was already coming down, and on this down move, at the end of this down move, this descending triangle was formed. So is this bearish structure valid? No. The bearish structure is valid only when it occurs at top, swing highs or swing lows. So that was the main difference why this pattern failed and this pattern was successful. See here it occurred on the top. Price was moving up. Here at the swing highs this pattern was formed, and so the probability of this pattern to be successful was way higher than the other one. So we now have seen the difference, how when this move is valid and when this move is not valid. Okay, so now let's move on to the trade that I took. This I traded in this equity. So what I anticipated was that this is daily chart to be okay. Let me mark it out, daily chart. So I saw that price has been moving continuously up on daily chart from December onwards, December 2024. Here it formed a low, from there it went up. Almost for 5 months it has been moving up, and the movement was how much? Let me measure it for you. Where is the measuring tool? Measuring tool. I guess okay, it is not. I can't find it at this moment. Okay, let me try once again. If yeah, measuring tool. Yeah, it was hidden. So with measuring tool, let me measure it. Okay. Ignore that. Oh, I will have to do it again. Why is it not happening? Okay. So it is almost 43%. Can you see here? That was 43%. 43, 45%. So after a 45%, normally what we would expect? We would expect a down move. And at this swing highs, I saw a pattern formation on daily chart. This pattern is head and shoulders pattern, H&S. Head and shoulders pattern. So this is shoulder 1, this is our head, and this is shoulder 2 in formation. However, I took a risky trade. I entered early thinking that it will come down, and so anticipating this as a head and shoulders pattern, a reversal pattern, I anticipated the move downwards, and so I try on looking on a better opportunity. I tried to enter. So let's move on to 5 minutes chart. So on 5 minutes chart at this candle, actually I was not ready to trade in this script. I had planned to trade in a short another script, which is a twin of this script, this equity, because the price was not going high of that script, and this had that day had went really up. You can see that day it was moving up. So seeing a great opportunity, I tried to sort it, and so I entered at this candle. Actually, this was a news-based entry. I saw a news that would propel markets downwards, and so I entered at this candle in a hassle. However, after my entry, I can see that price moved up. This is the last candle of that day. Here the day closed. Next day the price again went up and there was huge MTM loss. I was scared, to be honest. However, I was confident that there might be a down move. At this point my maximum loss was around 5,000 on one lot. I had bought a put option, and so it was 5,000 loss. However, I was confident, and so I held on to the trade. Then I saw price coming down. Let me zoom in the chart for you. As I was analyzing it, each candle I saw there was upper wick was forming, and comparatively the lower wick was shorter. The candles in which we there was lower wick, lower shadow, those were smaller, whereas in candles that had high upper shadow, those candles were quite big. So this was overall a bearish, uh, portraying a bearish scenario, and so I held on to the trade. Later I found that it has formed a descending triangle pattern. This gave me confidence to hold on to the negative trade in hope that it will, since it is bearish pattern, it will come down, and so I can gain some profits. At midday I saw a breakdown, and when at this level my entry was somewhere here, and when price came to this level, seeing slight profits, almost break even, uh, uh, excluding the taxes. The taxes I the profit that I had went up to like in taxation, and so seeing a great opportunity at break even, I exited this trade. At this point somewhere I exited this trade. However, if I had held on to it, you can see I could have gained some profits, decent profits on this trade. So that was the trade that I took, and even though, and we can see that when our entry is uh, quite early, we this is early entry only, news based entry, and so when entry is not good and price goes against us, it creates a panic, and in that panic it demoralizes us to not hold on to the trade. Had I entered somewhere here, somewhere this level also, at this point losses would be not much, and so I would have held on to the trade. That would have boosted my morality, gave me confidence, and so I would have held it and gained decent profits. However, these things happen in this game. Psychological, this is a game of psychology, and so sometimes this happens. Not sometimes, this is usual phenomena in this game. Anyways, so that was all for this video. Hope you guys enjoyed watching this video. Feel free to ping down in the comments any doubts you have regarding this pattern. See you in the next video with another structure and price action concept. Till then, bye bye. Signing off, Aryan.